What's up, guys? Welcome back. This is part 2 of a 2-part mini course that I've put together for you, the YouTube family, to help you guys better understand how I use divergence. Now, if you missed part 1, the link to that is in the description down below. In part 1, I really go into detail on how to draw divergence, where to draw it, and then how to use it to identify support and resistance zones. But that led us to the question that I wanted to save for part 2, because it's a big question, of how do we know when we can still take trades with divergence present? Because it's easy to identify divergence, Austin. I know how to do it now. I watched part 1. Now show me how I can still take trades even if divergence is present. So if you're new to the channel, if you're new to this mini course, my name is Austin Silver. I appreciate you being here. Do me a favor, if you find any value, all I ask in return is a comment down below or a thumbs up as well, because that's all that we need to help spread this value to the rest of the trading community. So if we take a look at the charts, we're going to go over the same pairs that we talked about in part 1, which again is why I want to make sure you go check that out. So the link is down below. We spoke about a few NZD pairs in particular. First, we're going to take a look at Nzd Chf. Now, if you remember, this is exactly how it looked yesterday. I didn't move it. Today, we see that the pair moved higher, and it actually presented some long entries here on a few NZD pairs that guys in our VIP chat were able to take advantage of. But if you remember in yesterday's video, in part 1, I explained that we would not want to go long with this bearish divergence present over here on the left side. We would not want to go long until we were above that support zone that was created in the divergent structure. So what ended up happening? We broke above last night and then presented 2 long opportunities today, one at 9:45 and one at about 4:30 in the morning. Both of those are New York time. Both of those entries are easy to identify if you understand when divergence is broken, like I just showed you on price action and the RSI, and you're above that or below if you're selling it, support sensitivity zone, and it's confirmed. It's got to be confirmed with a solid entry signal, our A1, our D1, our D2, or whatever you're using that's proven and tested, your system. That entry has to come after the divergence is broken. The bigger picture is also super important. If we just zoom out here on the 1 hour and take a look, you'll see from the start of the week, all this has been doing is rising. How do we know that? Take a look at the RSI again. From the RSI low this week into the price action low, remember how we draw our reaction points 1 and 2? Reaction point 1 is here. Reaction point 2 is the price action. Remember that from part 1? That divergence tells us what? That we might see bullish movement. What has it done since then? It's held that divergence structure low, the support sensitivity zone down here, right? I'll draw that for you just in case you don't see it. It's at that pin of the low right there. That zone has been held all week as this bullish divergence comes up. So when we see that bullish divergence on the 1 hour, then we go down to the 15-minute and we see more bullish signals. We want to make sure that there's just no bearish divergence in our way. Oh, there was? Wait till it's broken and then we'll rock our trend. Cool, it's broken. Now we're looking for longs, following that higher time frame bias. There's one more piece to this that I think you can use to really help confirm the trend and the overall higher time frame direction, which is going to help you take the trades into divergence. Let me make it very clear what I'm saying. If there's divergence present on top, like there is here, and it's bearish, right, telling you that price might come lower, you can take that trade into that divergence when you're above your zone, when you show bullish signals, A1, D1, D2, and when the higher time frames confirm that that's the direction you should be trading. Now, let's take a look at Nzd Jpy, a very similar situation here. You see the divergence to start the week yesterday. Price consolidated at that zone overnight, but pushed through really hard, right at this changeover from the Asian session into the London session. Then it used that range here as support to move higher, and that's where you'd be okay to go look for entry signals long. The divergence is clearly broken. Then go to the higher time frames to confirm the overall direction. Again, what do we see here? The same thing. Rising RSI this week, like that, and falling price action, divergent, telling us we have possible bullish momentum to some extent. Does it have to go all the way to the 800 EMA up here? No, it could have stopped at the 200. But with that divergence present on the bottom, you got to know that this is now your zone of sensitivity here at the pin low. Again, that was discussed in part 1. And you know that it could absolutely go what we would call full reset to the 800 EMA. It could go higher. You could still use this divergence if it continues to hold. One more thing I could recommend that you maybe want to sprinkle into your analysis, okay, is if you add onto the TDI, the 2 components that make it a TDI, so I should say if you add on to the RSI, the two moving averages that make it a TDI, now when you go in and identify divergence, you're going to be able to not only see it because you have the RSI, not only identify the higher time frame trend if there's any divergence there, but you're also going to be able to use this yellow EMA here that's applied to the TDI to dictate market sentiment, the overall underlying bias of the market. So when you can lay a really clean TDI with divergence going in your direction and higher time frame confirmation there, when you can lay all of that together, there's your cake. You come in and put your icing on top like I just showed you how to know when you can trade into it, and now you know how to use divergence to still take trades. Now, there's different ways to use divergence. For us, we can actually use divergence for entry signals, and we teach that in our course. But for YouTube, for you guys for free, I wanted to just put it out there of how I use it to identify simple structure and know when I can get in and out of trades. And then again, we talked about this multiple times, but you can also use this divergence to keep you out of trades. If you were to look back at yesterday, let's say you were looking to go long here, you would know because of this zone, and we talked about this I know in part 1, but you would know because of the zone on top here created at that divergence structure, you would know that it's not a great idea to go long until you get above it. Oh, the EMAs are in the way, the 800 EMA is right there, another issue. Let me just avoid this. Oh, the TDI looks like it's coming into, this is definitely avoidable. Oh, you wake up today, TDI is rising, market sentiment is rising, we're above that zone, it looks like it could move higher. Now, here's my day to trade it. This is why it's so important to know that you don't have to trade every day. Divergence will tell you when chop is possible. Pull back on those pairs that day, find something else, or go trade another day. You come back in today, clean head, boom. There's your same entry that you wanted yesterday, but it's 10 times cleaner. So you need your entry signal. You need to know how to draw the divergence. You need to know how to trade when the divergence is broken. And then you also need to really understand when the divergence is just telling you to wait. Just wait. Change is coming, Austin. Just wait. And then you're going to find a lot more consistency behind the entries that you're taking because you're not going to get chopped around at that significant price level. The divergence is going to be drawn, your support zone will be drawn, you'll know you'll look for the break before you go to take high probability trades. And we're always going to follow the higher time frame trend. If we're long biased and there's bearish divergence on top, I still might trade up to that. I'm going to size down, I said that in part 1 too, size down, still I'll trade into that if the risk reward is good enough. And if the higher time frames confirm the bias. If the higher time frames are short, I'm not going to go long into divergence. That's divergence telling me it's coming down and higher time frames is telling me coming down? No way. Never put money into that. But where we want to find the sweet spot with our divergence is trending trades at the end of their pullback. When you can find something moving higher and it's pulling back in a short-term downtrend, but you can find bullish divergence in that short-term downtrend to tell you that you're ready to move back in the direction of overall trend, that's where the money is, guys. So I'm hoping that now you understand at least these few things. Number 1, how to draw divergence with reaction point 1, reaction point 2 being the RSI low or high and the price action low or high. I'm hoping now you understand that I use a TDI, a 21 period RSI, to really show me sharp movements in the relative strength comparative to price action. And that's why I believe this divergence is so solid, because of the period that we use on the RSI. And also I'm hoping that you understand why these support and resistance zones, like you see here on Nzd Jpy, are so important. Because remember, you could have been trapped trying to trade this long. Amateurs were getting trapped trying to buy this here yesterday. Professionals saw this divergence. They said, let me wait until it's broken. This TDI could hold the buy zone. Price could easily come up and present me a better entry tomorrow. Oh, there's 2 great entries tomorrow. Oh, there's one on NJ, NU, Nzd Chf, entries on all the NZDs. That's where the market comes around, the trading universe comes around and rewards good trading behavior when you follow your rules like that. So I'm hoping that now you can take this information and go forward using divergence to help you make better trading decisions going forward. If there's anything that's unclear, please drop a comment down below. I'm more than happy to go into this with you guys in the comments, and you can always email me. My email's linked in the description. And again, part 1 is down in the description as well. So I hope you found some value. I hope it helps you make better trading decisions going forward. Make sure you're subscribed and a thumbs up if you liked it, and I'll see you guys in the next video.